Well, hello, my name is Laquita Parks, and this is a new season of My Heart on Pages. And listen, I am super excited. So, for all of you who have been wondering, well, what's going on? When's the next season coming? Here we are. Today we have it. So, My Heart on Pages is an amazing podcast where we talk to authors about the why behind their story. And so, for all of my new people, for those of you who don't know me, I am Laquita Parks, and I am the CEO and founder of Pay Pro V Publishing. Pay Pro V means pain, progress, victory, because I believe without pain, there's no progress, and without progress, there can be no victory. And listen, I have some exciting announcements before we get started. Guess what? Yours truly has won a publishing award that will be presented to me in Houston, Texas. And you guys know I'm a Southern girl. I'm down here in Atlanta, Georgia. All of my roots are here, my family's here, and I am super excited to be here. So I am a Georgia peach. Yes, I am. So I'm excited to get a chance to go to Houston, Texas. I actually have a bookstore in Houston, Texas that I haven't had a chance to get into. So I'll get a chance to visit there when I go. Sis Store Joy, you guys know about that. So I'm super excited. So listen, I'm all about the story. You guys know that I am all about the story because I believe that 100% of everybody living and dead has a story. So I'm excited to have my first guest of the season here, and I'm going to give him a chance to introduce himself. His name is Steve, and I'm going to let him pronounce his last name because I don't want to mess it up. So I'm excited to have Steve here. And listen, he is going to provide some amazing, amazing tips on retirement. And so those of you, I know I look good for my age, but I'm getting close. I'm getting close. I'm going to celebrate those double nickels this year, y'all. Okay. So
Double
we're
nickels.
got double nickels. I'll be 55. I'll be celebrating 55. And you know what? In the words of my favorite author, life for me ain't been no crystal stair. Okay. It's been amazing, but it's had some tax in it. But I am super excited to be celebrating, God willing, 55 years. Okay, I'm excited about that. So let's get into it. Hello, hello, Steve. How are you?
I'm very well, Lakita. I'm approaching a lot more than 55. I'll be the big 80
Hey,
in next May, yeah. Uh,
hey.
And
Now,
it's
I would
been
not have
it's
thought
been
that.
quite a trip. It's been a good trip.
Wow, you look
Yeah.
good.
Well,
You
thanks.
look
So do
good.
you.
Now,
Yeah.
listen, would you guys have thought he was going to be 80 years old? No way. You look good. So, once we talk about your book, you got to tell us your secret. What's the secret to living to 80? Oh,
I
wow.
I think it's the secret's actually in the book. If
Uh,
you when you get to it, and what I'm gonna be trying to convey to your listeners is that what this book is all about, it's about how you can achieve income independence. Now, if you have income independence, which to me means, you've got more than enough income coming in to take care of everything you pretty much want to do. And if you have something special coming up, enough that you can set aside so that you'll have enough to take care of that. That's income independence.
oh, wow.
And I've been there. I've been there a long time, and I think it's good for you mentally, physically, and socially. I mean, you name it. You name it. There's a lot of truth to be said that money isn't everything, but it's important to
Exactly. I
to
love
help you get everything.
it. I love
So
it. I love it. So go ahead and introduce yourself to our audience. Tell us your name and where you're from, and then we'll get into the
okay,
discussion.
well, I'm Steve Selengut. I'm now from Charleston area, South Charleston, South Carolina. Originally from the Northeast, Manhattan first, and then North Jersey.
Okay.
And what I've done most of my life is manage investment portfolios for private individuals and a few businesses. I've been doing that for over 45 years. I've been investing myself for over 50 years. And the key element, and it didn't come from me, it came from my dad and the way he ran his business, is that you got to have income.
Mhm.
Income pays the bills, no
Mhm.
matter how you look at it. I mean, you can have a great stock that you bought and you can hold on to it and hold on to it, but when push comes to shove, if it's not paying you any dividends, you're going to have to sell it to buy that car or
Mhm.
buy that house or whatever,
Mhm.
whereas if you change your focus onto the income generated by your investments, you can get a lot further a lot faster than by hoping the market will always go up, which it never has managed to do.
So I like that. I like that concept, and it's a lot, especially in my generation. It's a lot of people who we didn't get that concept. So I really like that. How did you get started? What made you get started in investment portfolios?
I started well, a lot of things goes to how well you choose your parents, and I was fortunate that my parents were fortunate,
Hmm.
and
Hmm.
so I grew up um, so that when I was having odd jobs and things when I was a youngster, when I was a teenager,
Hmm.
I was able to keep all that money. I didn't have to help.
Hmm. Hmm.
I didn't have to put money aside for my education. That was taken care of. That's a big advantage.
Yeah, yeah.
And I admit that privilege or whatever you want to call it, yeah, I'm
Oh
one of
yeah,
those.
yeah,
Uh, but what you do with it is a different thing. And what
yeah.
I did and what I saw and how my father had gotten to be able to do that for his family was that he focused on income. He was a real estate developer.
Hmm.
And not only did he develop real estate, but he said, well, I've got to hire these contractors to build these houses. He and his lawyer went out and they started a lumber yard. So
Hmm.
they had that source of income as well.
Hmm.
And then he said, well, you can't always sell houses. You can't always sell property. So I'm going to build a whole bunch of houses here that I'm going to designate as rental properties.
Hmm.
So I'm going to always have this rental income coming
Hmm.
in.
Hmm.
And he says, a lot of these people, they can't afford the down payments on their houses, or if they do go to the bank, they get ripped on the interest rate.
Right,
I'm
right.
going to charge them a lower interest rate than they can get to the bank. I'm going to tell them, go to the bank, see how much they'll loan you money for, and I'll beat that.
Hmm.
So I'm going to have that stream of income coming in as well.
Hmm.
I'm going to sell them insurance. So I've got no, I don't just have property. I'm not just building houses and hoping I can sell them.
Hmm.
I've got 5 streams of income coming into me that I
Hmm.
can use to pay your college education and your brothers and so forth.
Hmm.
So I took that the same way. When I was 25, he gave me the money that I didn't use to go to a Ivy League school because I was kind of a protester and I didn't want to do that. I wa- I wanted to be a wrestler, so I went uh
A
to
wrestler. You
a
did you
rest.
you
I
went
was I was going to be a wrestler. I was going to
okay.
wrestle in college. I was going to do that, and I went to a place called Gettysburg in Pennsylvania.
Hmm. Hmm.
And unfortunately, my dreams of becoming a college champion wrestler didn't come to fruition.
Been paying out.
But I didn't. I didn't go through all the money that was put aside for me for my education. So when I was 25, I was very fortunate, and I got this portfolio of securities,
Hmm.
and I was told that it was now my responsibility to take care of myself.
Hmm.
Okay, so I had this nest egg that I had to put to work, and I learned from a young woman who was a broker, and I can't even remember the name of the company anymore. But she really took me under her wing and coached me and showed me the charts and how things actually happened and what everything meant. What's a stock? What's a bond? What's this? What's that?
Hmm.
And we figured out, or I figured out, that if you take a company like IBM, General Electric, in those days,
Hmm.
Sears or
Hmm.
Sears Roebuck, and you own their stock, you can buy it. You can it'll go. It'll eventually it goes up. If you set a target like 10%, you sell it and you buy something else with a similar pattern, and you do that over and over and over again. Long story short, I was commuting to New York. I had a terrible job. I hated it. I hated the commute. within 5 years, I was making 5 times my salary investing.
Mm.
And I quit the job, showed a few of my buddies how well I'd done in the investment area and asked them to help me start a business of investing
Wow.
for other people.
Wow.
And
You
that's
know
that's
what?
how I got there.
You know what? I like that because what you said, what I just took away from what you just said is education. You have to educate yourself. So one of the things that you said was finding out what stocks, what's bonds, and there are a lot of people who don't understand what that means. And I remember one year for Christmas, I gave my children, instead of buying them presents, my adult children, instead of buying them presents, I invested. I have a friend who has a company and it's doing really well now. But when he was getting it off the ground, he asked several of his friends to invest. And so we invested and I bought stock in the company and I gifted my children, each one of them, with several shares of stock. And so when the stock started doing well, I said, here's the option. You can sell it or you can let it sit there and let it continue to grow. And I gave them that choice. And so it started the conversation. Well, it didn't start the conversation there, but we had been talking about it on and off, and they're adults now. But now that the stock is starting to do really well, the company is doing really well, they have the option to sell the stock or let it sit to continue to grow. And I think that's a conversation in my community that's not had enough. And you said privilege. So there are people who is like, okay, this is far removed from us. We don't have money to invest. We don't know how to do this. We can't do that. And it's all about changing the mindset. So
Mhm.
what I heard you say is you were like, hey, I'm going to be a wrestler. So you were trying it, even though your parents had already created that. They already had created it for you. So your dad, bought property and he did things to generate multiple streams of income. So it was there for you, but you had to go out and learn it on your own in order to be successful. So I really, really appreciate that you said that. And so how would you suggest for someone who is not familiar with stocks and bonds in this day and time, not familiar with stocks and bonds and how to get started? How would you suggest a person who says, I don't have any money to invest. How am I going to invest in something I don't have any money to do that? What would your answer to that question be?
Okay. Well, the education part, I'm glad you emphasized that. The first 5 or 6, 8 chapters of Retirement Money Secrets educates people on the types of things that they have to be aware of
Hmm.
as investors, how to determine the quality of the things they're investing in, how to diversify properly, how to make sure you're generating income from it, whatever you do.
Hmm.
And the most important one of all, perhaps, is profit taking. Understand that the market is a cyclical
Hmm.
animal and
Hmm.
prices are going to go up and down. Companies survive that.
Yes.
All the major companies have been there many times. So it's not, you don't sell out of hate because you've lost money. You sell out of love because you have made money and you want to make it more and more. I mean, I have dozens of securities that I don't own right now. It's not because I hate them. It's because I've taken profits on them recently and I
Mhm.
love them and I'm going to buy them again. But yeah, that's the type of thing. Education is one thing. The other thing is taking advantage of the opportunities you have in your employment.
Yes.
It's one thing to start your own business and go out and generate wealth that way or to work for a new company and so forth.
Hmm.
But you have opportunities to use 401ks and IRAs and Roth IRAs and things like that. And I know it's true. I mean, you have to have enough money over and above your living expenses to do
Hmm.
that. But
Right.
I think it's more important to go out and start an investment account as a teenager, as
Hmm.
somebody in their 20s, than it is to go out and spend a few $1,000s on tattoos. I
See.
mean, I'm not, I've seen some beautiful tattoos, but when I see tattoos on people who are struggling,
Hmm.
I just say to myself, that money could have put to better work.
It's a
And
matter of prioritizing
yeah,
what's
you got
most important.
or having a vision or knowing that you're here for, and most children today, I mean, they can look forward to being here when they're my age,
Mm-hmm,
you
mm-hmm,
know,
mm-hmm,
if
mm-hmm,
if they stay healthy and avoid drugs and all the other things that are out there to entrap them. I mean, they
mm-hmm.
life expectancies are growing, if the planet doesn't self-destruct. Well, there's always something, right, to think about.
Yes,
But back
yes.
to your original question, I'm not avoiding it.
Mm-hmm.
It does take money to make money.
Right.
You can't say, okay, I just got my first bonus, even if it's 1,000. I'm going to go buy a stock that's going to go up and make me rich.
Mm-hmm,
Most people who do that are going to lose money on whatever the broker tells them
mm-hmm,
or
mm-hmm.
whatever they
Right.
select. Because now anybody can open an account at Fidelity or at
Mm-hmm,
Schwab or something,
mm-hmm,
or
mm-hmm.
many other things, and push the buttons and buy anything they want to with or without advice. You
Well,
know?
one of the things that you said too is when you have having a job and taking advantage of that stock option and that savings, because they make it possible where you can invest, and they take it out of your paycheck, and so you don't really miss it
Right.
because they take it, and if you allow that to grow, it can render you that's a great starting point. It's
Oh
a
yeah.
great starting point. Another question for you. What is market cycle investment management?
Like that's the it's really an understanding. You have, let's say you've established yourself and um, you just changed jobs
Hmm.
and you took your 401k from the first job and you now have a personal rollover IRA.
Hmm.
But the difference is they did the investing when it was a 401k. Now you have to do the investing in an IRA.
I experienced that.
Okay. So, um, so you've got that opportunity. So, uh, I'm sorry. One of the features of being 80 is that sometimes you lose your train of thought, as we all saw
Oh,
again
that's
as we've been seeing on interviews, on presidential interviews recently. We do
it
have,
doesn't, it's
we
not
do,
really 80. It's not really 80. It can be 55 too.
yeah.
It's not
So,
really 80.
but
We were talking
but
about
the
market cycle
the market
investment
cycle.
management.
Okay.
Yeah.
So when you've got this nest egg, let's say you've just got this IRA rollover, and where am I in the market? What can I expect? Well, we all know that the stock market right now has been going up
Hmm.
this year
Hmm.
very well. Uh, and it's been at all-time highs. There were all-time highs in two of the major indices yesterday.
Hmm.
There have been 50 or more all-time highs easily this year. So the stock market is very, very hot. So
Hmm.
since it is, that means the prices are up.
Yeah.
Brokers and radio uh, commercial people and newscasters are excited by the market. It's up as if it's always going to be up.
Right.
So just look at any chart, and charts are very, very clear.
Hmm.
There are ups and downs. And if you look at the stock market over the course of years, you're going to see some very, very highs followed by very, very lows. I personally have lived through three major meltdowns: 1987, 2000, and 2008.
Hmm.
Not to mention the tiny little 2020 COVID,
Hmm. Hmm. Right.
2 month,
So,
two. So that's what you have to. Where am I?
hmm.
So right now, no, it's not a good idea to go out and buy individual stocks because they're all
Hmm.
priced too high.
Hmm.
But at the same time, interest rates just went up from 0 to 5% in less than 2 years.
Hmm.
So all income focused investments are pretty much below where they were 5 years ago.
Hmm.
Aha, light bulb. These securities right now, and I buy them in the form of what are called closed end funds, which
Hmm.
are actually trust
Hmm.
vehicles. They own hundreds and hundreds of securities inside, similar to mutual funds,
Hmm.
but they're yielding almost 10% right now. twice what you can get in the bank. And if
Yeah.
interest rates go back down, they'll go back up in price. If interest rates continue to go up, they'll go down in price. But
Right.
that doesn't matter because the income is going to continue to come in.
No matter, no matter.
Pretty
You know,
much, pretty much no matter. Yeah, there's no guarantees in this world.
none,
But
none.
I haven't seen a whole lot of situations in my investment career where
hmm
these securities have bit the dust, so to
hmm
speak, you
You
know.
know, it's difficult to get somebody to understand that you would render a better yield on your investment if you invest, as opposed to if you put $500 in your savings account, at the end of a year it's just going to be $500.
And plus maybe 5% right
Yeah,
now,
right, which is a
which is, $2 and 50
couple
cents.
pennies,
Yeah.
I say pennies.
Yeah.
But if you invest, you have the potential to yield a great return on your investment. It's difficult sometimes to get people to understand that, especially when they're saying, this is all I have. This is all
Mhm.
I have. And it's a risk. So going into that with that understanding, what are the four great financial risk minimizers?
Okay. First of all, financial risk.
Financial risk minimizers.
Financial risk means the risk of a total loss.
That's right.
That house is going to
At five
burn down.
hundred dollars.
That house is going to burn down and you have no insurance.
hmm
Total
Total
loss,
loss.
right? That company is going to go out of business and you're a stockholder.
hmm
Stockholders have no chance of recouping anything.
hmm
Think of Merrill Lynch in 2008. They went out of business. The shareholders got nothing.
hmm
Then Bank of America bought them and Merrill Lynch still exists, but those shareholders from 2008 got wiped out.
hmm
So that's 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 the thing. Um, so there's four types of risk
hmm
or four risk minimizers, and
hmm
I kind of mentioned. Make sure the quality you can identify the quality. You can look at it and say, wait a minute, this company's never made a profit. I don't want to invest with them.
hmm
Okay. Um, this company is, or this fund, this closed end fund only is invested in companies in Southeast Asia. Well,
hmm
that's kind of a less.
Risky, very risky.
I want something that's in, Europe and North America. That's where the
hmm
major companies are,
hmm hmm
so those types of, find out the quality, identify it. When you're looking at individual stocks, there's things called a price to earnings ratio.
hmm
And there you'll get a situation where you'll have a company that's $300 a share and they
hmm
have never earned a penny yet. Look at
hmm
Tesla, all the years. I don't know if it's earning money now, but for years and years it didn't.
hmm
New companies. Most people want to go for those new hot prospects, and
hmm
that's where they find it loses. So quality, diversification. Never put yourself in a position where all your money's in a
One
very
basket.
small number of individual companies,
hmm
individual securities.
hmm
Um, Closed-end funds, like I spoke of, you can buy closed-end bond funds which with hundreds and hundreds of securities inside. I mean, the average closed-end fund owns between 200 and 300 securities inside. So
hmm
you have instant diversification.
hmm
So this is for that person who's got his first $500 that he wants to invest. You can buy a closed-end fund, 100 shares for $5 a share,
hmm
and
hmm
have a
hmm
diversified portfolio that's yielding 10%. And if interest rates go up, the price is going to go down, but the rate
Gotta
the
make it.
rate may actually go up if the manager can take advantage of the higher rates.
hmm
If the rates go down, the price is going to go up. Now, when we're talking about income, which is the third risk minimizer, is having income, there are two types of income. And when you mentioned the word earlier, you said returns.
hmm
And in most people's minds, returns are how much the value of their account goes up.
hmm
You know, that doesn't produce any additional income.
hmm
The second stream of income, in addition to the dividends, is profit taking,
hmm
the profits. That's a second stream of income.
hmm
And if any of your listeners are investors who have portfolios. If they were to look at the income generated by their portfolios, it's likely that the income being generated is probably less than 2 or 3%.
Mm-hmm.
But in addition, they'll find it's very rare that anyone that either their advisors, if somebody's doing it for them,
Mm-hmm.
or their brokers, if they're buying it through somebody else, will ever take profits or recommend to them that they take their profits.
Mm-hmm.
People do not take their profits. And that's the biggest risk in my mind. After quality,
Mm-hmm.
not taking your profits is the biggest uh, creator of risk and all, for two reasons. One, the market is cyclical, and
Mm-hmm.
you'll wind up with that security going down and you getting all upset about it and selling it, maybe even at a loss. I
Mm-hmm.
used to say in my first book that most unrealized gains wind up on the Schedule D of your tax return.
Mm-hmm.
Okay, that's where the losses are.
Mm-hmm.
Okay,
Mm-hmm.
so that's the four basic risk minimizers, though: quality, diversification, income, and profit taking.
So
In Go ahead.
I'm sorry. So explain what are some reasons why somebody would not take their profits?
Love. Uh, I I I spoke to a guy recently. I do coaching now, so
Mm-hmm. Mm-hmm.
I'm not managing money for. I sold my business last year.
Mm-hmm.
Some they made us an offer I couldn't offer, I couldn't refuse. That type
Okay.
of thing.
Mm-hmm.
So now I'm doing coaching
Mm-hmm.
for people, and I've spoken and coached nearly 100 people already since the book
Oh,
was
wow.
released.
Oh.
And I've seen some strange things. I've seen a guy with over $1 million in one stock. And he says, I know, it's my wife's father's company. And since he's gone, that's her main memory of him. And so he's got $1 million in some company, not a bad company by any means, but it's paying a 2% dividend. And they're asking me how they can make more money from their portfolio. And I say, you got 25% of your portfolio sitting
Right
here
here.
right here earning less than 2%. How can I help you even if the rest of it's earning 10%? You know,
Right.
you know, the thing about closed-end funds, which is the vehicle I use, and I've been using it for the past 25 years of my career exclusively for income generation. And more recently, my stock market presence is also there for the same reasons. I own so many different shares in each fund,
Mm-hmm.
that I don't have to worry when the market goes down, and I know I can take profits when the market goes up. Um, so that's the type of thing.
So
So
I want to share some things that from the book. And listen, the book is available on Amazon. It's available for you guys who like to drive and read or listen. It's available in Audible books. So it's available everywhere. But here's some information. Retirement Money Secrets will give you the tools to stop worrying about having enough money to retire. That's a lot. That's concerning for a lot of people, especially those who are closing in on retirement age and kind of worried about what am I going to do financially and having to make the decision whether to retire comfortably or retire from this job and start another job. That's big. Also, stop agonizing over market vitality.
volatility.
Volatility. I knew I said that wrong. Stop obsessively scrolling the news about inflation. That's a stopper right there. Retirement Money Secret shifts your focus from chasing market value returns to creating a growing stream of reliable spending money. At the end of this book, you will be able to confidently say, neither a market correction nor rising interest rates, not even a pandemic, will have a negative impact on my investment income. In fact, either scenario will help me increase my income growth rate long term. And that's the key. long term. I like that. So what's the one advice would you give to our listeners today who are either just starting out, or they have started but they're scared. They're in a position like the people who haven't chosen to take the profits. What's the one piece of advice you would give them to move the needle today?
Oh boy. Well, I think they have to uh, discover this alternative type of investing. It's made a big difference to a lot of the people that I work with, and people in my Facebook groups have been commenting all along. Geez, this really changed my way of looking at things, made it so much easier. But the thing is that any stock you can think of, any bond, any company that you'd want to own some of their debt because you know they'd pay it. Um, all of those companies are included in these funds. These aren't new magic things that pay out. An equity closed-end fund will own 200 different stocks. So anything your broker is talking about or you hear about on CNBC or wherever you're listening to information about the stock market and which ones went up today and which ones did this and that, they're in these closed-end funds. So you can have an instantly diversified portfolio of stocks, and they trade for, the average price of these things based on this list of 100 of them I have in front of me
Mhm.
is less than $14 a share.
Mm.
Okay.
Wow.
The average yield is close to 9%. And that's the stock market ones. And each of these on average contain 253 different companies.
Mm.
And the average amount of time they've been in business producing this kind of income is 23 years.
Wow. That's
You know,
pretty.
so they're stable. They've been around forever. In fact, closed-end funds are the first fund that was ever developed in the financial markets. It was developed in the 1800s
Mhm.
before mutual funds were developed.
Mhm.
Mutual funds didn't really become popular really until the middle of the 1900s, but
Mhm.
you
Mhm.
know, but still, so they can get started there. There's a place called CEF Connect. I'm not affiliated with it in any way.
Mhm.
It lists all of these different types, equity and income based, even tax frees for your wealthy listeners who
Mhm.
have tax problems. They think whatever. Right now, because of these higher rates, these things have been raising their distributions, and they're now averaging over 6% tax free.
Mm.
So somebody who's in the highest tax bracket
Mhm.
in an individual account might say, well, that'd be a good thing. That'd be a good thing for me. It'll
Mhm.
reduce my average
Mhm.
taxes. But they should look at them. CEF Connect. I refer to it in the book many times and recommend that's where you start studying what these things are and looking inside and seeing what's in there,
Mhm.
seeing how long they paid what they pay, and so
Mhm.
on.
Mhm. So I like that. So guys, you have to get the book, Retirement Money Secrets. You have to get the book so that you can elevate yourselves and get comfortable in investing and set yourself up for retirement because we will get old. We'll get older and nobody wants to work wants to work for the rest of their lives. I have one last question for you, and I'm curious what you think about this. What's your idea? What are your thoughts on penny stocks?
In the book, I have this
Go
thing
back to the
called
book. We have to get the book, guys.
there's a thing called a risk pyramid. Okay. And what it does, it lists from the bottom of the bottom stable foundation. You have government bonds and the municipal bonds and high grade corporate bonds. And then it goes up and up and up until about the fifth floor. And that's where the first mention of stocks is. So stocks are more financially risky than all the other types of income securities.
Mm-hmm.
And then it goes up in there and there and there until the top. And at the top, you have global things and stuff, just things maybe you didn't hear of before.
Mhm.
And then there are things that are not on the pyramid at all because they are so risky you don't ever want to go near them. And that's where penny stocks would be, in my mind.
Okay.
In
Okay.
my mind.
Yeah, I have a friend who used to, and I don't know if he still does, but he used to do penny stocks. And I for a brief moment would get into it, but it became so it was so frustrating because it's like that it's like you're here, and then it stops, and then it goes this way, and it's like, oh, and then it goes boom, it plummets, and you're up and down, and it's kind of like your heart is on a continual palpitation. Like, okay,
Right.
what's going on? What's going on? And then you have to stay glued to it because it moves and shifts so fast that you're constantly at a state of unawares and unsureness.
Right. And it's, remember those four basic risk
Hmm.
minimizers?
Hmm.
The
Hmm.
quality is not there. It's never, no income is generated.
Hmm.
Diversification, well, if you own a lot of them, yeah, you're diversified, but diversified risk is still risk.
Yes.
And then the profit taking element. And I'm not even sure as many shares as the issue or you own, how easily it is to instantly
Hmm.
trade them at a price that you can say, I want to buy, I only want to sell it at six one hundredths of a penny, not
Hmm. Hmm.
less.
Hmm.
I don't know if you can do a limit order
Hmm.
penny
Whatever
stock.
it is, you have to really be committed to that. And
In all,
that's an all day commitment and literally glued to the market.
sure.
And
I
it's a who I don't know. Well, there are a lot of people who are committed to it, but
There are a lot of
the
people do
stress
it.
level is high. The stress
Yeah.
level is
I-
really high.
I've been an investor for 55 years. I've never owned a penny stock.
And you don't keep them. You know, that's not it's not a stock that you keep. It's a penny. It's called a penny stock for a reason because you don't want to hold on to that. And you lose, that's like you said, it's not even on the pyramid of risk because it's too risky.
Right.
So how can people connect with you? If somebody's interested, if one of our listeners or many of our listeners are interested in being coached and they have questions that go beyond the book, how can they connect with you to get some coaching?
Okay. I have a website called theincomecoach.net, and there's different levels. You can just get on the phone, get on a Zoom meeting with me for a Q&A. What are your questions about investing? I can another service is to just have your existing portfolios reviewed, just for me to tell you what risk elements do you have here that you should try to eliminate or
Mhm, mhm,
reduce to a certain extent. And then there's the full scale coaching where I'll help you move from a low income environment to a high income environment using closed end funds.
mhm.
But I only do, I prefer to do the coaching only for people who have read the book, so
Have to read the
it's,
book.
it, it'll, you can think about, well, I ought to talk to this guy, but if you read the book, you might just have all your questions answered.
Exactly.
You might not need me. So it's
Exactly. I like that. So listen, you have to purchase the book. You can get the book Retirement Money Secrets from Steve Selengut, right? Did
right.
I say that right? You
Hmm.
can purchase it from Amazon. It is available on sale today. You can get it today. And listen, you guys, 100% of everybody living and dead has a story. So our goal, especially with my heart on pages, is to help you become better than where you are. You have to move the needle and investing and getting into a situation where you're comfortable in retirement and where you are living a better lifestyle for yourself, for your family, creating a legacy, leaving a legacy for your children, for your leaving an inheritance. And I like what you said, Steve. Money is not everything, but it certainly does make things a whole lot easier. It can make life a whole lot easier. So, listen, purchase the book, read the book, and if you have additional questions or you want some additional coaching, then reach out to Steve so he can help you become better and move that financial needle. So, Steve, thank you so much for coming on this morning and being our first guest of the season. as soon as I click off with you, I will be buying the book because I have some questions and I believe I've been looking through it. And it does answer some questions that I had, and it is, this conversation has caused me to have a conversation with my children, and to, I'm curious to see where they are in their investments, and where, what they're doing. They're adults now and they've started having families, and so it's even, of course, there's like 25 years between us. So seeing where they are, because they're in a better situation than I was. Because when
Mhm.
I was their age, I didn't know anything about investment. I didn't know anything about saving, because I was taking care of children, and that was my priority. So if I knew this when 25 years ago, man, this life would be grand. Life is still great, but life would be grand. So thank you so much for being here. And listen, guys, I am Laquita Parks, and I'm all about the story. So if you want to tell your story, share your story, write your story, reach out to us at payprovipublishing.com. That's PAPROVI publishing.com, where we can help you take your story from a thought to a realization. Whatever your story is, there are people who are waiting for your story. So Steve just answered some questions that I had, and sometimes we don't know those questions, but it sparked an interest, and there are some things that are necessary to move the needle in my life. So I appreciate that. So listen, it has been a wonderful, wonderful conversation, Steve. Thank you so much. And I still cannot believe that you will be 80. I'm still trying to get around that. You look absolutely great. So, and look, read the book so that you can see what the secret is to living to 80. Okay.
There
All
you go.
right. Thank you so much, Steve. It has been a plump, pleasing pleasure. Better than a triple decker peanut butter and jelly sandwich. That's
Wow.
my story, and I'm sticking to it. And until next time, this has been My Heart on Pages. Thank you, and be good.